Hello, hello, hello. Good morning, everybody. How is everybody doing today? Can I get a audio and visual check in the YouTube audience before I start rambling on? Good morning, good evening, good night, depending where you are in the world. Thank you for coming to the Capital Hungry analysis and trading stream for the New York session this lovely Thursday morning. Okay, seems like the audio and visual check is good, so let's just hop right into it, shall we? Let's get through some of the nitty-gritty stuff first. Okay, it's just for anybody who may be new here, who might not know how Capital Hungry operates, you know what I mean? So, this is not direct financial advice, but there is a flow to these streams, which is labeled out in the description, okay? So the flow of these streams is that I go through analyzing the current fundamentals and impact on market sentiment, investor behavior. Then we go analyze the economic events we have on the docket and on our schedule for the day and how that can impact the markets we are trading. Then after going through that, you guys can't see the screen? Then after going through the fundamentals at play, the economic events and market sentiment, I go through analysis in this order on gold, GBP Jpy, GBP Usd, Euro USD, USD Cad, and US30, okay? So feel free to ask questions about technicals, fundamentals, if you want to send charts, if you want me to look at your analysis, if you are confused about something, feel free to ask the questions, but please do me a favor and save your questions until I go through analysis on all those pairs. You know what I mean? Any questions about Capital Hungry private service, just go to the capitalhungry.com website, Capital Hungry website, or message me on Telegram. For all of your Capital Hungry free resources, they're linked on the YouTube layout and in the YouTube description, as well as this little animated chalkboard on your screen. The Capital Hungry News Twitter at twitter.com capital_hungry. My personal Telegram contact, if you ever want to ask me questions, contact me. You know what I mean? Maybe rant about your... Actually, don't bother me if you want to rant about your life. The free Telegram analysis channel. And, of course, this YouTube page itself, okay? So don't forget to use all of your resources. This Capital Hungry Twitter page has already posted almost 27,000 tweets. You have all headlines, more headlines than Forex Live, more headlines than Forex Factory and so forth. Almost 27,000 tweets posted by the Capital Hungry News Twitter. The Capital Hungry YouTube page has over 100 plus webinars on educational concepts from technicals, fundamentals, trading psychology, scalping, intraday trading, swing trading, and more. The Capital Hungry Telegram analysis channel. Here you can see where I share analysis, information, trades I've taken, and so forth. For example, I was just showing you guys the full list of wins and losses from last month and so forth, the previous trades taken from the last month and the trades I took. You know what I mean? Fundamental information, technical information. You can find it all here. Withdrawals, just your boy just withdrew 10K from Dominion Markets, great broker. You know what I mean? You can find that all here within the free Telegram analysis channel as well. So now that we got the nitty gritty stuff out of the way, let's just get straight into the important stuff everybody comes here for, shall we? Now, remember everybody, understanding the fund, in my opinion, I'm somebody who's been trading the markets now for almost 5 years. I started in the early 2017 period, and my first 2 years were of course failure, right? Just burning through capital, a lot of over trading, a lot of over leveraging, having unrealistic expectations, looking to follow people's signals, marketers online, really getting impacted by social media fakeness, right? So please understand that through my experience of 5 years in the market now, it is the easy side of trading is back testing the technicals, is learning the fundamentals, right? Any of you in the audience right now can become just as efficient and just as well versed in the fundamentals and technicals as me, simply if you put in the correct time and effort day in and day out to studying these concepts. But over my 5 years now, the hardest part and the most focus you should be putting on is the trading psychology. Trading psychology and your potential emotional control, risk management, as well as focusing on the probabilities of the market is the major factor whether you become successful or become a failure, right? 99% of people in the retail trading market usually lose. And they're not losing because they lack technical knowledge. They're not losing because they don't understand fundamentals. Because at the end of the day, there's 1,000 ways to trade the market. You don't have to use fundamentals. You don't have to use technicals. You could use a combination of both. You could use indicators if you want, if you develop a trading system that you find consistency with, right? There's 1,000 ways to approach the market. There's 1,000 ways to trade the market in terms of tools and resources you may use. That's not the issue. The issue is human greed and the psychological factors that prevent people from keeping consistent profit, right? So sometimes the human psychology side, it can impact you on both sides of the coin. If you are taking losses and consistent losses and not having a risk management plan or any type of trading plan you are following, there's a higher probability you're going to get agitated, you're going to get stressed, you're going to get angry, and you're going to revenge trade, over leverage, over trade, and make even more mistakes, right? But even on the flip side, if you are winning trades and you are doing well, you still have to manage your greed because your mind naturally will never be satisfied. You could take 2 to 3 wins in a day, but your brain is still going to say, I want more, please. Let's make more money. Let's get another dopamine hit. Let's feel happier. Let's take another trade. And that on the flip side can also burn you too. So it's just as important knowing when to step off the charts, when to exit positions, and when to not trade, as knowing when to take positions and when to trade as well. But the best way to overall manage your emotions and keep realistic expectations is by first having a trading plan with specific rules and guidelines that you follow, following that trading plan, following your risk management plan, instead of focusing on instant gratification and the short-term profits so your mind doesn't get lost in that short-term gains and dopamine hit. Yes, it's good to feel happy when you take a win, but don't let it change your emotions and stay neutral as you focus on your long-term vision and your long-term goals. Regardless in what aspect of your life, when you focus on your long-term goals and long-term vision, it helps keep you a lot more level-headed and stack up the small wins, knowing that they are developing to where your long-term goals lie. Okay? So remember, as a manual retail trader, there's always going to be emotions involved. There's always going to be other psychological factors that are going to impact your decision-making process. Okay? So stay smart. All right, now that we got the psychology stuff and the nitty-gritty stuff out of the way, some of the recent fundamental points that have been in focus over the last couple of weeks and mainly over the last week. We can see that this week, Jerome Powell gave rate hike and further aggressive taper signals. This week, Jerome Powell and Janet Yellen came to the scene and discussed how inflation in the US and overall economic inflation is becoming very high risk and is no longer within their transitory range. So if you understand that over the last year and a half, as the Federal Reserve increased the U.S. money supply, working hand in hand with the U.S. government to obviously provide that stimulus and provide that economic support, as well as pump up the stock markets artificially, what this does is create a lot of economic inflation. But over the last year and a half, anytime inflation has ever risen, the feds will come in and say it's no big deal, it's transitory. Transitory meaning the inflation is only temporary due to measures related to COVID, supply chain issues, and the stimulus they provided. This was up until a couple of days ago. A couple of days ago, as we're coming towards the end of the year and a new month was starting out, Jerome Powell came into the scene and said the inflation now is no longer transitory, it's potentially high risk, and they will have to start using their monetary policy tools to start combating this inflation. Okay? For those of you who don't understand, I have a full webinar about this explaining the US dollar movement, gold movement, equities movement in more detail. 4 months ago, come watch this webinar. It'll give you a lot more information in detail about this specific concept, about what the central bank did and the impact it had on the markets and the timeline regarding that. This webinar right here. It's about an hour and a half, so obviously you need some time to watch it, but extremely informative there, okay? But anyways, so the Federal Reserve now is noticing that inflation is potentially becoming higher risk and no longer in the transitory range. So remember, the Federal Reserve working with the government was the one who essentially created this inflation. Because for those of you who don't know, 40% of all US dollars in circulation within history were printed last year. So there was an exponential increase in the US money supply. The Feds take this increase in US money supply and they artificially pump the markets and purchase assets to keep the economy afloat and to also make the rich richer within the stock market gains. For those of you who don't notice, the stock market, for example, if you're looking at US 30, ever since the pandemic crash, has almost doubled in value, going from the 18,000 circuit breaker low to almost 36,000 all-time high peaked, right? So, and this is during when the pandemic has still been going on and people have been suffering. But anyways, when they did this, the impact and the cost of this move is that inflation goes up and the cost of goods within the US economy go up, but the buying power of the dollar goes down. So I'll show you a great example of this, right? This is your dollar index chart, which has now just recently started to become a lot more bullish as the Feds have been giving recent taper confirmed starting, potential future rate hikes, and we've been playing this potential bullish market structure to come and dollar strength. But when the pandemic first came into the scene, for a year, you can see that the dollar drastically dropped in value from 103 all the way down to 89 and was extremely bearish. The reason it was extremely bearish was for the reasons I just told you. The Federal Reserve increased the US money supply. This means that the dollar is oversupplied and under demand, right? And we can see that the demand was in the equity markets. But this devaluation of the dollar, the people are the ones who pay the price. So when the stock markets were getting pumped up and the dollar was getting devalued, every single person within the US economy's dollar in their pocket had less value. The buying power of the dollar decreased, but the cost of goods went up. And during this whole time when inflation was going up, the Feds kept saying it's no big deal, it's no issue. Up until obviously this week, where Jerome Powell said that the inflation is finally an issue and they're going to start combating it. When they start combating the inflation and do more aggressive tapering as well as interest rate hikes, what we're going to see happen on the dollar is very similar to what has happened in this overall higher time frame range here. Between these significant lows and these significant historical highs is the range the dollar has been playing in for almost 8+ years. You can see we had a similar move here with the devaluation of the dollar, and then it starts to rally and fully correct that downside move as we get the fundamental confirms. Same thing here with the devaluation of the dollar, and then as the Feds give confirms about the tapering, potential rate hikes, and so forth, dollar should, over the course of the next year, make its way up to this 100 price point in this wave fashion. Okay? But anyways, the reason last week why gold had that drop and why dollar went so bullish, and you could see pairs like, for example, GBP USD had this very aggressive drop. Gold had this very aggressive drop here. And the equity markets also started to decline across the board, was the combination of the new Omicron variant, was the combination of Jerome Powell and him talking about the inflation risks and giving rate hike signals, and more on the equity impacts was, of course, from the Omicron variant. Okay, so we can see that Jerome Powell and what he said this week had a bearish impact on gold and a bullish impact on the dollar, and I'm still looking to play that sentiment fundamentally. The Omicron new variant has had a bullish impact on the Japanese yen and a bearish impact on global equities and stock markets, which I'm going to show you in a second, and I'm also looking to play that accordingly. The only thing we have to keep an eye out on is understanding that it's the start of a new monthly period and coming towards the end of the year. And we can see that profit taking and repositioning of order flow on the higher time frames. So we can see that the market sentiment has been in a bit more fear mode. When the market sentiment is in fear mode and investors are a bit more uncertain or doubtful, this means that you see a decline in global equities across the board. And you also see more strength in the individual volatility index. You also see more strength in the individual volatility index here and the Japanese yen, which has been showing a lot more strength from its lows. So there's a higher probability that when the market sentiment is in more fear mode, or you're holding that dollar strength, yen strength, and VIX strength, that the structure of GJ is going to be bearish. And we're primarily going to be looking, this is USD Cad. So the structure of GJ is going to be bearish, and we're primarily looking to play that bearish market structure on GJ accordingly. The structure on GBP USD is going to be bearish, and we're sticking to that bias. The structure on Euro USD is bearish, and USD Cad is the inverse in bullish. Okay? So now we understand that the market sentiment and investor behavior is more on the fear side, on top of having the catalyst from Jerome Powell as well. This is showing us stronger strength in the dollar, stronger strength in the Japanese yen, and weakness in equities, and we can use that correlation to our advantage as we're going to narrow down the technicals and potential price points of entry across the board here as well. Okay, but before we do that, let's just make sure everybody understands what economic events we have on the docket. So we've already had some data over our Euro session that impacted the Eurozone at 5 a.m. Eastern and gave Euro individually just a little bit of strength, as producer prices monthly and yearly were still showing a solid increase, and the unemployment rate was still lower than prior and right on forecast. What our focus is for today in our session is going to be the initial jobless claims data here at 8:30 a.m. Eastern and the continued jobless claims. Now, the forecasted economic expectations are that initial jobless claims might actually show an increase, and it has starting to show a bit of an increase overall across the board there from the last couple of months too. But we'll obviously look at that when the time comes. Around 8:15 a.m. Eastern, we'll check out the markets 15 minutes before this, as it's only about 7:20 a.m. right now. But that's it for data on the docket today. Then we have some further data, obviously, during our Asian session, with the main meat and potatoes being Friday, with all of the PMI data, which is very important, over Euro session. And then, of course, our NFP, unemployment rate, average earnings for American data here. Okay, but that's obviously Friday. Friday should be a lot more volatile, a lot more impulsive. Okay, now let's look at and do some analysis on gold. I like to go to the higher time frames and go my way down. Hopefully this doesn't bore you. What I'm always looking at is potential historical, fundamental, and technical repetition across the board, and then zooming in the time frames to get more refined information. Okay, so we can see here gold is doing very similar movement to what happened during the 2008 financial crash in terms of what the central bank did. the impact on the market and the overall technical movement and order flow movement as well, right? We can see in the 2008 financial crash, we peaked all the way to these all-time highs, right? At that time, this was the all-time highs. Then started to create a very strong demand zone while also respecting bearish supply zone here and not breaking any higher, and creating more refined bearish market structure after having these several bounces within this range here. Okay, but what kept gold so bullish during the period of the 2008 financial crash for that year or two were obviously economic fear with the 2008 financial crash, interest rates being low and the Fed's cutting interest rates, inflation being high as well, and these are all fundamental bullish factors for gold. Then we peak these all-time highs and get profit-taking moves by buyers, enter this corrective phase for another period of a few months in a year, and then as we get economic recovery, the Fed's taper stimulus support and start to rise interest rates, you can see we have this bearish move back down to the demand zone of this higher time frame range and start to enter some bearish corrective structure on the higher time frame as well to retest higher time frame bullish structure before having this rally here. Right? So we can see the same thing that happened from 2019 to 2021. Here we had trade war drama and Trumpy going off. Then we had the potential Iran tensions and almost World War III go off. Then we had the pandemic. But during this time, interest rates were low, inflation was rising, economic fear was high. We peak these all-time highs here and also create this supply zone while also having this higher time frame demand zone respected across the board, but starting to create some more refined higher time frame bearish market structure. You can see we failed to break this demand zone an extended period of times while having these bounces in between the range, but overall looks like as the Federal Reserve is giving more rate hike signals and potential aggressive tapering, that we can start making our way down back into the 1700s and then into the next year, if we have more economic recovery, make our way down for a deeper correction into the 1500s before potentially seeing another rally again, right? The reason why I'm showing you guys the monthly time frame is because we just had a monthly candle close and a new monthly candle open. And as a manual retail trader, regardless if you're a scalper, regardless if you're a day trader, it's good to zoom out and have a bird's eye view on the markets. It's very easy to get lost in the noise and get lost into your own personal bias and grow an attachment to what you expect rather than what the market is actually doing fundamentally and technically. So a good way to avoid this is by always doing some fresh analysis and zooming out and having a bird's eye view on the market and looking at different time frames as well as you develop your knowledge and experience, right? Does that make sense for everybody, or is what I'm saying complete gibberish? Everybody following along so far in the chat? Right? So now we can see that gold, as we zoom in more to this monthly structure, had a very strong rejection here the last month at bearish market structure retest point here, and then ended up closing below this resistance zone and ended up closing bearish here, with the potential that, in my opinion, over the next period of weeks, as long as we don't break back above like the 1810s here, that gold should start to fill its range down back to this higher time frame demand zone. Okay? So far, this new monthly candle is just opening up and it's just grabbing some liquidity and making that upper wick. But my anticipation is to start having this candle flip bearish and making its way back down to these lows. As long as everything stays status quo. Now, on the intraday time frames, this is the 4-hour time frame here, right? So you can see on the 4-hour time frame, we had this bullish market structure respected for an extended period of time until we're starting to break it now, right? We're also breaking below this little support zone, but there's a lot of noise and struggle in this area to the left around the 1760s. I can see us still make our way down to the 1760s, but we will need a stronger fundamental catalyst to break below the 1760s and make our way back down into the 1720s and then 1680s. But overall, we can see the price action here is very bearish. This upside move here got fully corrected for multiple reasons, and I'm going to explain that now, okay? So you can see here, as we peak these intraday highs, we start to enter a consolidation phase with exhaustion by buyers and not enough fundamental reasoning or buyer order flow to break above this price point. Then, for those of you who don't remember, the prior weeks, Joe Biden selected Jerome Powell to be the Federal Reserve head again. This had a bullish impact on the US dollar and a bearish impact on gold, leading us to having stronger bearish impulsive moves and printing these intraday lows. From these intraday low price points here and the peak high point here, you can see that from this low printed by sellers, we had a profit taking move, pullback, double top in this area, and more sell orders collected, driving us down into lower lows. Okay? So what I'm looking at here primarily on gold is still looking to play the bearish bias and bearish sentiment, seeing how we broke below this very significant support zone as well, and potentially looking for retests of this area and continuations back down, or breaks below 1772 sells and continuations back down. Okay, so now let's zoom in even more to the hourly time frame, and now using the information that we just stated as well as the current price action, let's set up some potential scalp trade ideas, shall we? So don't mind it, the white lines are higher time frame historical key levels. These are the trade ideas I see. In the short term, we can see we're getting a double bottom exhaustion from 1772 and not enough order flow to break above this price point, right? So in the short term, I also think that at 8:30, the initial jobless claims data is going to be bad. If we break above 1781, I see short-term buys for us to take advantage of, up to retest 1789 for potential sells from this area. So the green box is a buy entry zone and buy area, and the red box is a sell zone. Or if we reject here and come back below 1781 and follow this pathway of price, or I only see sells if we don't break above here and break and retest below these current lows that we are struggling to break at the moment, here and here. So my main bias on the monthly time frame, based on the fundamentals, based on the technicals, is bearish, but we do have the potential for gold to do a pullback, come to retest better sell areas before potentially continuing back up. Between about 1773 and 1776 here is a no trade zone for me. Okay? Does that make sense for everybody on what I'm looking for on gold, the reasoning why, the fundamentals at play? We do have initial jobless claims after. Also, don't forget, all of your live headlines up to the minute are to the left of your screen here too. Okay? So after I go through the analysis on all the pairs, we're going to zoom into the 1 minute time frame on gold here and wait for these price points of interest to potentially execute trades. If we break above 1781, I'm going to be looking for pullback buys up to 1789 for potential better risk versus reward sells here. Or if we don't break above 1781 and gold just continues down with the overall trend still, I'm going to be looking for sells below 1772. Okay? This is the potential pathways of price I can see in the areas of interest that I'm looking for to execute on. The reason why I have key levels set is because, number one, these historical key levels are based on yearly, quarterly, and monthly price points, right? And number two, when you give yourself specific areas of interest to play with, you can avoid taking random impulsive trades at any area, because psychologically, you can essentially take a trade at any price point. You could jump in a buy now, you could jump in a sell now based on whatever XYZ reasons you may say, right? But what we have to do as manual retail traders is try to have as many control points as possible to have a system in place and rules that we follow. So for example, with me on gold, I only execute trade positions at these potential white lines, which are higher time frame key levels, as rules of mine, and because these higher time frame key levels have great reactions across the board, right? You can see the high points at 1876, 1852. Here you get the reactions at 1812, the lows and so forth. They have great reaction points. You know what I mean? So you have to have as much control in your trading as possible. The issue with a lot of manual retail traders from a psychological standpoint is that they focus on the items that they can't control. Oh shit, news did this. Oh man, spread spiked. Oh man, my stop loss got taken out. Oh man, this market structure didn't work. The indicator failed me. But they don't focus on all the points that they can bring into their control, such as when you trade, what style you trade, what pairs you trade, how you trade, your risk management, your trading rules, and so forth. When you put more focus on the items that are within your control, that is how you increase your control and your probability of success within the financial markets. Okay? So the higher time frame key levels work as great price reaction points, as you can see here across the board with some of these reactions, but also give me more rules and control of specific price points that I enter on. And you can see this similar with the GJPPLs I'll show you in a second. Okay? But anyways, those are the trade ideas I see on gold. Now let's go to GBP JPY. So, GBP JPY on the higher time frames has been extremely bullish on the market optimism, and of course having this historical repetition take place. You could see that this was the 2008 financial crash. This was when Brexit first came into the scene, 2015. This was the pandemic crash here, right? But what I want you all to understand is that this was not random. The 2008 financial crash, the Brexit crash on GBP, and the pandemic crash all took us to the same surgical price points. Buy low, sell high for the institutions, right? You can see that they all came to around this 120, 125 price points and failed to break. This being the 2008 financial crash, this being Brexit, this being COVID, and then creating this higher time frame potential bearish market structure where looky, I found a Wookie. This is exactly where we're having rejections right now. Do you see why I tell you to zoom out and look at the higher time frames? Right? As soon as we had this high created here, the 2008 financial crash came to the scene, meltdown, but still never broke below this significant price point, retested it again, had this rally. Then we came and retested here, had Brexit come into the scene, then came all the way down here as well. Right? Then we had the pandemic crash, came down to this demand zone institutional historical low, still failed to break this price sensitivity area again. Right? And not just that, you can see the same repetition. Sorry, I didn't mean to yell at you guys or scare you. I just want you to really understand this stuff because it'll open your eyes to how the markets work. Nothing within the markets is random. Everything is pre-planned and surgical to make the rich richer. You know what I mean? Money movement to make them richer with fundamental catalysts in play that have the impact. Okay? Sorry, I didn't mean to yell at everybody. But let's look at this. Look at this higher time frame demand zone, right? You can see when the 2008 financial crash happened, you had this bounce, then this bearish market structure created here. Do you see it? Right? When the Brexit crash happened, you had this bounce and revisitation here. It's almost fucking identical. And then this bearish market structure created here. Then for an extended period of time, you have this bullish upside rally, all the way until you go to retest higher time frame bearish market structure here. Where here, this was 2008 financial crash. Here, this was Brexit. Here, now we're getting the Omicron variant. You know what I mean? Now we're getting the Omicron variant here. The same time we're getting this rejection. Okay? So we do have the potential that we can start breaking below this support zone if we have some more market fear and potentially get a downside move, especially if the Japanese yen holds strength and especially if the Omicron variant fear gets larger. Okay? So now, let's zoom in more. I just showed you guys historical repetition on gold and the historical repetition on GJ. This is the reason why, for anybody who's in the private channel right now, for this entire, ask anybody here who's in the private channel right now. For the entirety of 2021, we were playing GJ buys from this demand zone. All we were doing is pullback buys, breakout of retest buys, and continuation buys here. You know what I mean? Just get to the point instead of saying the same shit. This is to help people learn. I already know all this stuff. I'm fucking rich. I made 40K last month. You know what I mean? I'm rich. I know this shit. Jacob Lee, you're broke. That's why you're in my stream waiting for trades. You know what I mean? That's why you're waiting to drop a big 10-cent lot on a GJ trade to make your morning. Me, I'm fucking good, man. I'm just trying to help people learn. You know what I mean? So anyways, yes, Bob, that's what I'm getting to right now. All right? We were in a higher time frame GJ bullish bias until we came to this specific price point of interest and started to reject, but also had new market fear come into the scene. You know what I mean? The market fear that we had come into the scene that you all understand now is the market fear that we had come into this. You can see my Telegram and all that stuff, but make sure you show it's a live account, not your demo account, Jacob Lee. So the market fear that we had come into the scene here now, where we're starting to get this rejection, was the Bank of England not hiking interest rates and also this new Omicron variant fear. Okay? So now, when we zoom in more here, we can see we're getting a lot more exhaustion and a double top at this very significant higher time frame bearish market structure retest point, and we did not have enough order flow here to break higher, right? So now what I'm essentially looking for is that if we start to break this demand zone and the monthly candle comes below 149, we're going to get a deeper correction down into the 145s. Okay? But we're sitting on a very strong higher time frame demand zone. And yeah, we're waiting. We'll show your profit on the screen if you prove it's a live account and prove it's your account. Just like I've done for 3 years now. 10,000. 40,000, 25,000. 47,000, wins, losses, everything. Show me a slip like this and then I'll look at it. You know what I mean? And it better not be a FTMO account. It better not be a funded account. It better be your own money. But anyways, okay? No, I want to see the live tag. I want to see the live tag. I want to see, show me the live tag. I want to see this fake shit. Show me the live tag that with your name on it, Jacob Lee. Make sure it's not FTMO and show me the live tag. Then I'll give you some respect and say, and I'll apologize. Now, anyways, now what we can see here on GJ is I'm going to explain in more detail. Is now we have this bearish market structure forming here and solid bearish market structure as well. And in Capital Hungry, we were calling the potential pullback sells here, and I want to target these lows. Okay. The reason for this impulsive drop was the Bank of England not hiking interest rates. Then we had other countries like Austria going into lockdown. Then here we had the Omicron variant. Okay, so the overall intraday price action and market structure as well as fundamentals on GBP JPY are bearish. We also have UK equities in a decline from their highs. Affian, you took those GJ sells we called out in the private channel? Anybody else? Yo, Darren, did you jump in the GJ sells? Yeah. So we can see that UK equities are showing us a decline from their highs. Right? Yeah, but I trade on MT5. Oh, you're talking about this other guy. Yeah, fair enough. So UK equities are showing us a decline from their highs. This shows me that investor confidence within the UK economy is weaker right now. Okay? We can also see Japanese yen individually is holding strength from its lows. Bearish market structure, bearish price action. Let me put on my secret PPLs indicator. All I was looking for was playing the same waves of having lows printed, pullbacks, and continuation sells back down to the lows. I need to put on my secret indicator here. See how the Capital Hungry private members are killing it? This is my secret reaction indicator. It costs about $1,000 a month. No, you can just it's just manually plot. It's just automatically plotting the PPLs. So this is what I've been playing. We've been seeing continuous lows being printed by sellers and only having either consolidation phases and breakouts to the downside or pullback phases collecting more sell orders from better price points and continuations to the downside, right? So essentially when we're looking at market structure, whether you're looking at bullish market structure or you're looking at bearish market structure, price can only move up in two ways. When you are bullish, you're going to have a combination of buyers entering the market, pushing price up, having buyers then, as prices reaching a significant higher point, buyers liquidate their positions and profit take. As they profit take, sellers jump in hand, and this creates a pullback to a more favorable demand zone before continuing up again, or creating a consolidation zone before breaking out, and then generally moving up in this fashion. With the exact same thing on the inverse for bearish market structure. You have buyers enter the market, push up price to a favorable supply zone, profit take, sellers jump in hand, creates a pullback to a demand zone, you continue back up. Sometimes you don't get pullbacks, you get consolidation zones in order blocks, which is the collection of orders, and then also continue back up. You know what I mean? Yeah. Where's your live tag, guy? This is fake. This guy vanished after we called them out. Just a little bit of comedy. I'm just joking around. I don't really care what anybody else is doing. So, in terms of trade ideas today, what I'm looking for is that either we can get another retest of 150.5 sells, breaks below 150.2 sells, and breaks below 150. And I want to target these previous lows. Just like, for example, when you zoom out here, you can see that you had this low printed by sellers. Then you have a pullback phase. You go to revisit these lows and potentially dig deeper. Lower low printed here, right? Lower low printed here. You can see we have a pullback phase to collect more sell orders, and then we come back to target these lows again, right? And same ideology I'm seeing now. We had a lower low printed, sellers take profit, do a post what now? I didn't get anything yet. I'll check in a second. Sellers take profit, right? But you keep watching my stream, Jacob Lee. I still made more money than you, bum. now you edited the live tag on 40 minutes later. But anyways, sellers take profit from the low, create a pullback phase, collect more sell orders, and now I want to potentially continue to target these lows again. All right, I mean? So as long as UK equities stay relatively weaker, as long as GBP respects this bearish market structure and price action, and the Japanese yen holds individual strength, this is what I'm looking for. I'm going to be looking for... Yeah, at the end of the day, you could always go start your own live stream. I'm going to be looking for sells from 150.5, sells below 150.2, and sells below 150. All right? I would only look for GJ buys if we broke above one. We would have to break above this bearish market structure. What the hell is this? This is supposed to be 0.5. No wonder that alert kept going off. That's why that alert kept going off. I had the line wrong. Okay, so now I would only switch into a buyer bias on GBP JPY if we broke above this higher time frame bearish market structure. Okay? Otherwise, I'm sticking to the seller's bias. I patiently let the pullbacks take place, or the consolidation zones generate that liquidity, and look for the sells at the consolidation zone highs or the break below the lows, or look for the pullback sells continuation down to the lows. All right, everybody. We got some headlines here regarding the new Omicron variant. Oh shit. Everybody. EU Public Health Agency warns that the new Omicron variant could cause over half of all COVID infections in Europe within the next few months. So we just got this headline a few minutes ago that's bringing some short-term market fear, as the entire European Union Public Health Agency warns that this new variant could be a leading factor for half of all the infections in Europe. So they are trying to bring more fear with this new variant, so they can push the vaccines even more. You know what I mean? Guys, beware of prop firm. I've never heard of them. If anybody uses that, beware of them from this Zen Pip guy. I don't know who the fuck this is. Okay, let's go to GBP USD next, shall we? So anyways, trade ideas laid out for gold. Gold's approaching 1781. Let's watch for some breaks above for the pullback buys up to 1789. We have New York session open in 10 more minutes as well. So we'll probably get a little bit of a pullback, then break above 1781. GJ trade ideas laid out. We're going to keep it on the lower time frame here as well to look for entry points if we get the retest at 0.500 or the sells back below 0.200. We got some headlines coming in regarding the new Omicron variant and how it's more higher risk here as well. Just go, if you guys don't like the stream, just go start your own stream. I'll come watch your stream. It's not a big deal, you know what I mean? This is just a YouTube stream. This isn't like your job. This isn't like a workplace you have to come to. This isn't school, like you don't have to be here. You know what I mean? So if you guys don't like the stream, just go start your own stream and then I'll come watch you. See how you talk, you know what I mean? So far we went through gold, GJ. Let's go look at GU now. GU is going to be in this same, is going to do the same historical repetition as well, right? GU is in this higher time frame range and order block. That is the exact same inverse of the dollar, right? So what we can see is that from these demand zone low points over the last year and a half, when the dollar was extremely weak, we had this very strong bullish rally on GBP USD here, right? But we can clearly see, what's this? Outbreak of the Omicron variant also confirmed in Oslo for Norwegian media reports. So more fear headlines regarding this. Someone says, you're all making trading complicated. You don't need all this info. That's perfectly fine, Jacob. But I wouldn't want to trust a surgeon who's just looking at a textbook to do surgery on somebody. I would much rather want to bring the combination of knowledge of fundamentals and technicals to give myself higher probability, more confidence and understanding. I wouldn't just tell a professional basketball player all this nonsense, right? You made 20K last month without all this fundamental BS. Congratulations. I made 40K, 50K last month. So I doubled you. So that means maybe if you introduce fundamentals, you can make as much as me. Crazy, right? Denmark also registers 7 new cases of the Omicron variant. This is nice. We have a lot more market fear coming into the scene here. Okay, so rejections at this same higher time frame historical zone, same potential technical repetition we're seeing take place as well. I have a high feeling now that we're going to start to create this same bearish market structure we saw from the 2018 period and start to make our way back down to these 1.25 price points. Okay? I'm just reading the comments. Don't worry, everybody. Yo, guys, don't worry about it. It's just banter. It's just banter. It's not impacting the analysis. It's not impacting me. It's not a big deal. You know what I mean? It's just banter. So, you know what I mean? You guys ignore this guy, right? And focus on the information I'm giving. And then I'll keep giving the information and also throw some roast here and there. It's not a big deal. You know what I mean? It's just banter. So anyways, does that make sense with the historical repetition I was showing you guys on the gold as well as GJ here too, and now on GU, right? So we can also see that we've had much stronger bearish market structure on the higher time frames as well, with the stronger intraday structure being still bearish and respecting our bias here, just creating this bit of a consolidation zone here. Okay? So personally, you can see the way this pair behaves. You can retest an area multiple times before dropping. For example, look at this example where it looks like you're going to break above multiple times, but you collect more sell orders and still end up driving down, right? And we also obviously have the evident US dollar strength. But do you guys want me to give you a great tip on GU here? So look at GU structure from this decline here and this ascending channel, right? And then how we had this more aggressive drop here outside of the channel. Everybody take a quick visual snapshot of this, right? Take a quick visual snapshot of this. Now come here and look at the individual structure of the US dollar world reserve currency by itself. And tell me what you see. It's the inverse, right? So you can use that correlation to your advantage. The beautiful thing about the US dollar is it holds so much weight on the global stage, right? Because it's the world reserve currency, and because it holds that weight, that regardless what pair it's in, the dollar movement is what holds more strength. So you can see it's almost exactly the inverse. Having this ascending channel, breaking out of the channel as well, and coming to retest it. And then when you come back here and look at GBP USD, it's the, I put it on the line chart, it's the exact inverse. So note that down, that if you guys are trading Euro USD, GBP USD, that you can use that correlation to your advantage. All right. Even if you're trading USD Cad, where the correlation on USD Cad is a positive correlation, it just follows dollar movement almost to the T. You know what I mean? So that's a great little tip for you guys, that when you start to understand the fundamentals and you start to understand the movement of smart money through the entire economy, right? Through the entire market, sorry, not the economy, that you can see the correlations and how you can use that to your advantage. Does that make sense for everybody? Just a quick little tip there. Oh shit, this is the wrong thing. Okay. So in the short term here, we can see that the US dollar from the new high points being printed is in a little bit of a pullback phase, but it could still come down to 95 and still be relatively very bullish on the higher time frames here. Right? So when I'm looking at GBP USD here, I'm still looking at this previous low area with the inverse of the dollar as a still potential sell point, with safer sells below these lows, which is also lining up with the bearish market structure. Okay? So I'm still looking for sells from this area, even from 1.34 sells. Sells below 1.327. We just have to keep in mind that we have the initial jobless claims in 30 minutes, and the initial jobless claims looks like it may be bad today. But overall, I still like to play with this trend. I still like to play with the market structure and the current fundamentals in play, which is obviously a lot more US dollar strength. And overall bearish market structure, with sellers continuously printing lower lows. But I also want to show you guys something very important, that this pair does very aggressive pullback plays when the time comes. When you have these significant lows created, but those pullback plays are in correlation with the dollar pullback plays. I only see us entering this pullback play on GU, and I only see potential GU buys if we break above 1.35. Okay? Then I can see the potential that we validate that exhaustion from the lows, potential double bottom and support being created. You come back above the previous low price point, then you take advantage of that corrective structure, not from right at the lows, because I don't like to counter trend trade. So if I want to take pullback trades, I have to wait for price to come back above the previous lows, first confirm the exhaustion, then confirm a bit of an upside move, then come back above the previous lows, with here being these lows here, and then I could take advantage of the pullback buys accordingly if dollar is weaker. If dollar is weaker and GU breaks above the previous low at 1.134 flat, then I can see potential pullback buys in a pullback phase on GU. Does that make sense for everybody or no? Right now, I can't validate that we're in a pullback phase yet. We're in this phase where we've had a low printed so far. But just because we've had a low printed doesn't mean you're always going to get a large pullback. Is everybody following that or no? Yes, no? So as long as we remain below this previous low for the time being, I'm still going to be in the bearish bias. I can only see the pullback phase if 1, US dollar weakens, 2, we break below the previous lows and have this same type of repetition. But we do at the current moment right now, we don't have those confirms yet. Okay? Yeah, New York session just opened, so just give a few minutes, just let New York session open, do its liquidity grab, and then we'll start to check out lower time frame price action for scalp entries on gold, GJ, and the other pairs we're doing analysis on right now. And we also have jobless claims in 28 minutes. I hope the guy who said fundamentals don't matter just randomly trades NFP tomorrow, only following market structure, then gets his asshole eaten. In a bad way, not in the new trendy way people like. So I would only take buys if we broke and retested above 1.34. Otherwise, below there still sells, below here still sells, break below here sells. Yeah, you know, hey, I'm not saying I like it. Not me. Don't judge me. I'm just saying, like, nowadays, it's trendy, people eating ass. Back in the day, when I was younger, it'd be a gross thing. It'd be a bad thing. But nowadays, it's a good trending thing. You know what I mean? It's not my preference. I know people who enjoy it. Like, you know what I mean? 8 a.m. Eastern is New York market open, like North American market open. NYSE is 9:30 a.m. Eastern. 9 a.m. Eastern. No, I don't eat ass. Fuck you guys. I don't eat ass. Oh, man. Sorry, yo, someone asked a real question. Okay, 8 a.m. Eastern is North American market open. Banks open at that time. 9 a.m. Eastern is the new 4-hour candle. 9:30 a.m. Eastern is NYSE stock exchange open, okay? Alright. No way. What's this new coin? Sorry, I had to see this headline. Wakanda Inu? These new coins are coming out every day. What the hell is Wakanda Inu coin? Freaking Black Panther coin? What kind of trader is trading in those hours? I don't understand that question, my friend. The market is always moving. You just have an inflow of volume. Okay, a good 80%, I made that percentage up, but I'm guessing a good 70 to 80% of the market is automated trading from institutions, private funds, and other investment groups that are constantly being involved in the market from a high frequency perspective and a long-term trading perspective that creates the market waves. This is an example of Asian spot prices from multiple bank contributors for all of these currencies across the board, right? So you can see that the banks don't look at currency crosses, they look at individual currencies, and this is primarily against the dollar value, right? You can see the contributor of these bid and ask prices is changing every single second from various institutions and banks, and you can see the locations of these banks is across the world and also changing every single second. You have Zurich, London, Toronto, New York City, Hong Kong. You have the banks changing, Barclays, Reuters, Cougar, HSBC, Cambridge Bank, CBM, and so forth. You know what I mean? So what I'm trying to tell you is none of us can trade like a bank. We're not supposed to trade like a bank. We're supposed to trade with the information, tools, and resources at our fingertips. We don't have the employees and the manpower the bank has. We don't have the capital and resources the bank has. We don't have the technological advantages the bank has. We don't trade on that high frequency perspective that the bank can. So it's all irrelevant to us. But this movement of the banks on a high frequency perspective and on a lower frequency perspective is what's constantly keeping the markets moving around the clock. All right? And this is only contributors from Asian spots, not everything else around the world as well. Every single second it's changing, prices changing, flashing, updating, different contributors across the world, different locations, different deals, whether it's an Asian exchange, whatever it may be, the sources of those deals, every single second. And this is only updating as fast as this feed can update. In reality, it's milliseconds. Bang, 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 bang. Okay. Yes, Mr. Markey, what we are looking for is this trade idea. We're looking for short-term gold buys above 1781 to retest sells at 1789. If you guys, you could just always rewind the stream as well too. I'm looking for the buys above 1781 to even potentially retest 1789, then see sells from these areas. Or just the sells below 1772. No, I went to college and I took a business administration course, but within that degree, there was macroeconomics, microeconomics, and finance courses I had to take. But honestly, I didn't learn shit in detail through school. School really just teaches you like really old, broad information to potentially get a job. It's not going to teach you real world applications so that you can become a millionaire investing or trading. You know what I mean? All right, GJ did not give us the full pullback for the sales at 0.500, but the new hourly candle made its upper wick. Now, if we get 1 minute closures below 150.200, start to look for your sells for 10 to 20 pips down to these price points. Okay, once we break below 150.200, I'm going to be looking for those. Yeah, I did. I went to college years ago. I don't know if you guys know my age. I'm 28. I'm 28 now. I'm an old man now. I'm almost going to hit my midlife crisis soon. You know what I mean? Starting to think about death and how life really works and what's the point of all this shit. But anyways, not trying to put that on you guys. That's for my own personal. You know what? Yeah, I'm older now. I've been involved in the markets for like 5 years now. You know what I mean? I'm an old ass man. Not actually, but I'm getting to that point. I know, but you guys know what I'm saying. Like I went to college years ago and when I was 19, 20. You know what I mean? I know. I'm just joking around, guys. I'm just joking around, all right? Yeah, I am supposed to be getting married and shit soon. Fuck my life. Spartan, shit, Jeeve, I'm 50 next year and only started eating ass. I wish I could pin that comment right now. No, I'm not. Yo, listen, age is nothing but a number. Age is nothing but a number. It's all about how you feel. It's all about how you behave. It's all about how you conduct yourself. You know what I mean? Okay, Euro USD. We can see some short-term corrective structure forming here. Right? If we come back below 1.3100 and dollar still holds strength, I'm looking for sells below these price points. Yo guys, keep in mind, be careful with gold, because in about 10-15 minutes we have jobless claims data, so we're gonna have to watch that accordingly. But I do think jobless claims is gonna be bad and potentially help us some gold buys, but only if we come above 1781. All right, otherwise we're only selling gold below 1772. Jacob, very good question. I used to check COT reports, but that was before the pandemic. And that was more for just higher time frame swing trading analysis stuff. But ever since the pandemic started, I stopped looking at COT reports because they've been more irrelevant, as the market has been primarily following market sentiment. It's been following the fear or optimism regarding COVID. It's been following the central bank positioning and how they've been handling COVID. You know what I mean? So yes, last year, or no, not last year. I can't believe it's almost the end of 2021. So in 2019, before the pandemic, I used to check COT reports maybe once a month, just to understand some higher time frame order flow positioning. But ever since the pandemic started, I stopped looking at all of that and I just follow market sentiment. All right. Okay, so that's a good question as well. When was my turning point? So for those of you who don't know, yes, I'm starting to find success and consistent profits with trading. And I show you guys the wins and losses and all that shit as well. You know what I mean? Like, it's not like it's not like I'm trying to hide anything. You can see I've taken big losses, the wins and so forth and all that stuff, right? Over the last course of a year. But if you come to this channel here and you go to the first post, you'll see that I started finding some consistency in April 2019. And this is when I started finding consistency and taking it more seriously and using penny lots, right? This is when I started making like now you guys saw me make $40,000 in a month. But this is like 2 years ago when I started finding consistency, making $1,000 in a week using penny lots, but the same fundamentals, the same technicals, you know what I mean? Sharing the trade ideas, sharing the analysis. This was 2019 gold days, right? But what I want you to understand is that I started trading the markets in 2017. From the period of 2017 to 2019, before this consistency and before the point I am at now, I lost $50,000 in 2 years. So I was working at Royal Bank of Canada, had a full-time career job, making about $65K a year, right? And for 2 years, half of my salary went into the markets. I was over leveraging, I was over trading, I was trying to flip accounts overnight, I was trying to follow signals, I was trying to follow account managers, I was looking at all these marketers online, I was looking at all these people showing all these huge profits and making it look so easy on the internet. And that's what my expectations were, right? So my first 2 years from 2017 to 2019, I lost $50,000 total, like just being a straight gambler. You know what I mean? Then in 2019, I put my head down and started studying the markets. Started studying the fundamentals, technical psychology, and started with penny lots, stopped over trading, stopped over leveraging, was just focusing on the process. April 2019 is when I made this free channel, right? And then you can see like April 2019 is when I started finding consistency with profits. And this was still using penny lots, using fundamentals, using technicals. You know what I mean? It's all here if you want to go scroll and go look through it. If you want to see the process I've taken over the last years. And now, the current day, I'm at this point now where I just did like a 10,000 withdrawal. Right? Or here, where you can see, like, I'm not trading this week. I'm not trading for the next couple of weeks because this was my last month here. Right? So it's not like I'm hiding losses. Losses are completely normal. The wins and losses are shown. But my progression that I want to show you guys was not overnight. It was over a period of years. Where the first 2 years was straight fuckery. You know what I mean? Yeah, I paid personally probably about 100K in taxes last year. I paid $100,000 in taxes because I'm a sole proprietor and I have minimal expenses as my business and trading is all online based. So with the capital gains from trading and with the income made from running the capital hungry private service, I had $100,000 tax bill. Yeah, it really fucked my asshole. No homo. No, never mind. Why do I keep talking about assholes and shit? It really fucked me over. You know what I mean? It fucked me over. Saying too much sus today. Okay? So my point is that losing, going through those trial and error processes, having those failures is completely normal. All right? Going through that trial and error process, trying to flip your accounts overnight, trying to over leverage, trying to over trade, I really think that everybody goes through that at one point or another. But when are you going to take full responsibility and accountability for your trading and stop blaming the market and stop blaming everybody else? That's the real question. And for me, that was 2019. So 2017 to 2019, I was blaming the world. I was blaming the markets. I was blaming everybody I'm following. I was blaming social media. 2019, I said, you know what? All the losses, all the failures have been nobody's fault but my own. And I won't find success unless I really start studying this craft, right? Just like a doctor has to go to school for 10 plus years, then get practice in the medical field, then develop their profession to make that high amount of money. Just like an athlete has to train for 10 plus years, 20 years to make that high amount of money and professionally and potentially go pro. Just like a lawyer has to go through university, law school, the bar exam, then develop themselves within their practice in business to make that money. Trading is the same. It's going to take 5 years, 10 years, longer than that to potentially find consistent success and so forth. You know what I mean? So yeah, Euro USD, this area sells, breaks below 1.131 sells. I would only switch out of a buyer bias if we broke above 1.385. Then I can see us entering a deeper pullback phase and still having some potential sells and continuing back down. All right. USD Cad here. USD Cad has obviously been following primarily the bias of the US dollar, which the US dollar individually has been bullish besides this pullback we're having now. But even though the US dollar has been doing this pullback here, right? USD Cad has still been extremely bullish. I got a quick pop quiz for you guys. What is the fundamental reason the Canadian dollar has still been weak by itself? No, if you guys want to learn stuff more in depth about what I'm not talking about here, first go watch all the educational webinars and put the same work in I did. Good job, Jacob. Good job, Ashley, Calvin. Yes, you guys are correct. So oil, if you guys have been noticed, has been dropping, right? From the short term with the market fear. Oil has been on the decline from its $80 highs and has been bearish, dropped all the way down to $66 a barrel. Maple syrup, yeah, you're also right there. Maple syrup reserves are down. Canadian maple syrup reserves are also down. Big impact on the Canadian dollar. But anyways, oil has been extremely bearish. One of Canada's main revenue export sources is oil, right? So when oil is bearish, the Canadian dollar is also weaker and bearish. This has kept UCAD very bullish. If we come back down to 1.27, I'm still looking for buys. If we come above 1.283, I'm still looking for buys on USD CAD. Okay. We also have OPEC right now starting to discuss what's going on and keeping oil more bearish as well, talking about the South African countries being banned with the Omicron variant. So we have an OPEC meeting that just started. and so forth. So on USD Cad, I'm in a bullish bias. These are all the buy zones that I'm looking for. Even if we came down to 258, I wouldn't sell. I'd still be looking for just playing with the bullish structure, playing the fundamentals of dollar strength, Canadian dollar weakness, and playing the buys to the upside. All right. Now, if you guys can just give me about 2 minutes here. We do not have any trade ideas to execute on just yet. We have the jobless claims data in about 8 more minutes, but I'm about to shit my pants. I really got to go to the washroom. All right, so just give me about 5 minutes here. Yes, I can. 5 minutes back. Less than 5 minutes back. Popped it out, wiped, flushed, back. You know what really saves a lot of time? If you guys actually get the flushable wet wipes. I'm bougie. I don't use toilet paper anymore. I used to use toilet paper during my broke days. No, I'm just kidding. Now I got them wet wipes. Simple. All right, I'm back. So we have 4 more minutes till the jobless claims data. So far, we don't have any trades to execute on yet. Gold obviously didn't break above 1781, and we're not touching this zone. The trade ideas we're looking for on gold are either the buys above 1781 to set up the better sells at 1789, or the sells below 1772. We're just gonna wait for the data here. We have a U.S. House and Government funding meeting at 9:30 a.m. Eastern. Oh, new Omicron case found in England that was not linked to any travel. We do have a lot more fear coming in. Norway government introduces several. GJ should drop below 0.200, I think, with the new 4-hour candle. I think GJ is going to break below 0.200 at like 9:30. No, this isn't Raja's stream. I don't do buy stop, sell stop for news. This is my stream, not Raja's. I wait to actually see what the news data is and then see if we can potentially use it to our advantage with the price action. Raja's doing a boot camp right now in Dubai. Wicks don't lie. He's doing a boot camp right now. He told me to host an NFP stream tomorrow. So I was thinking about doing that tomorrow too on YouTube. He kept telling me, he's like, yo, dude, bro, do an NFP stream. Do an NFP stream. I'll get you a lot of views. I'll get you a lot of views. Do it, bro. I was like, okay, man. Obviously, I don't get as many views as Raja because Raja's huge, man. Raja's a major player in our community. Probably one of the top players in our community. But he told me to do it, so I was like, yeah, should I do it tomorrow? NFP stream on YouTube? It's not going to start at 7 though. It's going to start at 7:30. 7:30 till about 9:30. All right, how many people do we have watching right now and how many likes do we have? How many people are watching right now and how many likes do we have? If we can get the likes to match the viewer amount, then I'll do it tomorrow. And I'm not even I'm not joking this time. Raja actually asked me, he's like, yo, bro, do an NFP stream tomorrow. Like he actually, so that's why. Otherwise, I wouldn't have done it. No, this isn't no baiting this time. This is like Raja's actually asking. Okay, jobless claims is still good. Continued jobless claims is still good. Gold should push down. Let's see if we break below 1772 and get the sells below 1772, shall we? Jobless claims is still higher than prior, but better than their forecasted expectations. Continued jobless claims is also dropping as well. Not too much of an impact right now. But we'll see if we get the sells below 1772. Didn't do shit right now, so far. So if we break below 1772, as we didn't get the deeper pullback, we will sell below these lows. But also, for those of you who don't understand, with this data being good, it's going to weaken the Japanese yen in the short term because the Japanese yen is a safe haven currency. So that's why the same time the data came out and it's good, it's not anything huge, but GJ also pushed up short term right now too. All right. But GJ, obviously we didn't get our sell confirms at the areas of interest yet. We're just in this lower time frame bit of a range here. And we didn't break below 0.200 yet. All right. So be cautious now with the GJ sells and don't jump in the GJ sells yet. Because right now, this economic data being good and being optimistic has a short-term impact on weakening the Japanese yen. See, this is the hourly on the Japanese yen. See, as soon as the headline came out, the Japanese yen is starting to drop a bit. So don't jump in GJ sells yet. We have to wait for more confirms now and wait for a deeper pullback. Even though the data is US data, American data, it has an impact on market sentiment because the Japanese yen follows safe haven properties. When market fear is high and data is very bad, or there's very bad fundamental catalysts at play, the Japanese yen is strong. Hence why you had this huge upside move on the yen with the Omicron variant fear. Omarion fear. You know what I mean? Omarion's back in the scene. Okay? But when data is good, it can potentially make it a bit more bearish and snap below this range again. So right now, we don't have any execution points. Gold is still just ranging here. GJ is also just bouncing around, ranging here too. We have no entries yet for this trading session so far. Nothing to call out live. I don't really see anything high probability to execute on yet. Didn't have too much of a market impact either, the initial jobless claims. It looks like, in my opinion, that primarily today markets are going to range, and then we'll have the stronger moves tomorrow with NFP. First of all, with all of the PMI data overnight. Okay? So we have all this PMI data overnight, which is very important. See here, US Treasury yields, little change after the weekly jobless claims. It had minimal impact. All right? Yeah, any questions, feel free. If you guys want to send a chart, I think you just have to send the TradingView code in the chat. And if you have a question, just ask a question. I'll have a higher chance of... That's just a part of the icon terminal that I have. Higher time frame levels are set based on yearly, quarterly, and monthly significant price points of interest. But that is a secret for the private channel because the key levels are so sick. They're cheat codes. With my expectations that we're early into the new month, that we've had very strong economic volatility over the last weeks as well. First with obviously Joe Biden selecting Jerome Powell, that caused a dump on gold. Then we had the Omicron variant fear, that brought a lot of volatility. Then we had the end of month rebalance of flow moves. Now, as it's the start of the new month and investors are waiting for all the NFP data, I won't be surprised if we just range today, consolidate, and then get the next set of impulsive moves tomorrow with all the PMI data overnight on Eurozone. And then obviously the NFP unemployment rate and such as well. Yes, I'm anticipating that this non-farm payrolls is going to be solid data on Friday. I think the unemployment rate is going to hit 4.5%. I think the non-farm payrolls is going to be lower than the forecast, but still better than the previous. Maybe it'll come out around 540, 535 or something like that. And then we also have the market PMI data, the ISM non-manufacturing PMI. Tomorrow is a heavy data week, a heavy data day, sorry. This is all just on the Friday. Yeah. Oh, somebody sent a code? I'll check it out. Hold on, dude. Is this shit? Oh, you're looking for some gold buys from the low for about 40 pips? I'm only personally looking for gold buys above 1781. especially as the data was a bit stronger as well. And even the short-term buys I was looking for was just going to be very short-lived as a pullback buy from 1781 to set up better sells at 1789. I thought that during pre-New York hours and New York Open, we would push up to here first, grab some liquidity, then have the stronger jobless claims data and drop. But instead, we just had the rejection at 1781 and this bit of a drop here instead, as the jobless claims really had minimal impact on the overall markets. You know what I mean? Okay, so for anybody who is asking questions about like these specific concepts, please make sure you go through all your capital hungry webinars on the YouTube page. This is free. This is free. This is more than Daniel Savage has on his entire computer that he charges people $900 for. This is more than Q Bank's entire Wall Street Academy for the last 10 years. This is free, and it's more than any marketer is asking you to pay for, right? Okay? It's more than this retard. It's more than this fucking retard Danielle. It's more than, trust me, right? People think that, okay, I'm going to explain to you guys something. There's a common misconception that if you pay for something, it's going to be better. And if you pay a high amount for it, that it's even better. This is wrong, okay? There's more information here on technicals, fundamentals, psychology, scalping, analysis, economics, and so forth. There's more information here than any single marketer on Instagram, guaranteed. Find me one marketer who has a paid course with more information than this on markets. You can't do it. You can't do it. You can't do it, right? I even organized it into playlists for you guys. Educational trading webinars, individual market analysis, live market update webinars, all of these trading streams, even self-development personal videos. You have 61 previous live streams you can study from London and New York. You have almost 20 live market update webinars. You have 30 plus individual analysis on pairs. You have almost 20 educational webinars, 25 personal self-development webinars. All right. If you want more than that, then you have to come join the Capital Hungry private channel, where in the private channel, you get access to this newsroom. You get access to key level price alerts, session reminder alerts. You get every week, this is what we go through in the private channel. Let me show you guys on the left of your screen here, right? This is what I do every single week in the private channel, just so you understand how much we do, all right? You guys are gonna be shocked. And I'm not trying to flex, I'm not trying to get you to sign up, but this is the process every week. First, mental remind. This was the start of this week, all right? First, mental reminders. Then, a weekly trading psychology webinar, which sometimes I do it fresh, sometimes it's one of the YouTube videos I just did on the Friday, right? Then a weekend news briefing report. Then a weekly recap and refresher webinar hosted on Vimeo here. This is reviewing what happened last week and understanding everybody's fresh in the markets. Then your weekly economic events report and exactly what we have from the news terminal. After that, your weekly political events report. After that, your key fundamental points that are in focus for the week. After that, our market sentiment analysis of investor behavior and how the order flow is moving through the entire markets. After that, we do our London sessions and trading sessions here. Every day we do a New York scalping session every morning. Every evening during Asian, I do a trade ideas intraday update webinar. So members can use that information for trade ideas overnight. And then in the morning, we do our New York scalping sessions every morning. So you can see that you get 5 intraday market update webinars at Asian every single week. You get 5 New York scalping sessions. You get access to the newsroom. You get access to the community of people sharing analysis, sharing their trade ideas they executed on. Example of that and stuff as well. You get access to all of our tools like the session reminders, our price monitor, our key level price alerts, and all that stuff as well. And you guys want to see the real juicy stuff? On top of all of this, which we do every single week, like look, this was the start of this week I just showed you guys here, right? This was last week. So last week you could see the same thing. We rinse and repeat your mental reminders, your psychology webinar weekly, a fresh weekly psychology webinar. This was last week's news briefing, weekly market refresher webinar. All of this stuff, this first set of information is sent on the Sunday. You know what I mean? That's all sent on the Sunday. Then we go through that same flow. Every single week we go through that same flow. Then we do our market update and trade ideas webinar. Save and upload that so people can follow that along. Then we do our New York scalping sessions 5 days a week. All right. On top of getting access to the community banter chat, the newsroom, the capital hungry trade room with all the resources, all of those webinars and everything else stated here, right? You also get access to this. This is the juicy shit. This is the capital hungry educational webinar vault. These webinars are not on the YouTube page. There's only a few of these webinars that are on the YouTube page, right? In here, these are the educational webinars so you can learn all the concepts that I use first. Human errors in psychology, educational webinar, fundamentals and technicals, how to do analysis, psychology, candle bodies and wicks, trends, key levels and candle signals, key levels and trends, market structure, psychology, fundamental educational webinar, understanding lower time frame part 2, scalping core concepts part 2, swing trading part 1 and part 2, mapping and dissecting fundamental moves, understanding economic data reports, measuring economic impact, understanding market sentiment, tools to read market sentiment, the pricing in concept, market environments, market correlations, market seasonality, how and why to do top-down analysis, central banks, US debt and economy, gold educational webinar, oil educational webinar, stock market educational webinar, understanding dollar corruption and how the markets move, trader's brain psychology, compounding psychology, 2 other psychology refresher webinars, higher time frame review, key levels analysis and review, historical analysis, next US recession and so forth, blah, 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 blah. You know what I mean? So when you first join the Capital Hungry private channel, members go through these educational webinars first. They have to take notes, send me their notes, and then make a trading plan. Then you start following along everything else we do in the chats every single day and every single week. You know what I mean? But I'm telling you right now, if you are a new trader, Capital Hungry is not for you. You have to at least know the basics. And I suggest you go through Raja's Wickstone live streams. I suggest you go through the market fluidity course or baby pips. And once you go through the content with Raja, or you go through the content on baby pips and you have your basic understandings, because Raja's course will explain everything. Pips, how to count pips, enter trades, exit trades, trade management, and all that stuff as well. You know what I mean? So yeah. But the Capital Hungry service and community is next level if you want to get more in depth. You know what I mean? Yeah, sorry about throwing that quick advertisement. But a lot of people are confused about what we do in the Capital Hungry private channel. But before you do any of that, if you don't feel comfortable taking that risk and you don't feel comfortable for that $100 in the month, then make sure you go through all this shit first. Go through all these webinars first on the YouTube page, all free. All right. Now, so far, we did not have any execution points yet. So we did not enter any sells on GJ below 0.200 yet. Most likely, this is going to come soon at NYSE. I still think market fear is pretty high because now we have Germany talking about the COVID infections. Germany's Chancellor Merkel is talking about the situation being very serious regarding COVID, right? We also have an outbreak in other countries, and main focus of headlines is about the new Omicron variant. So this does have the potential to keep equities relatively softer, and when we get the confirms for the GJ sells at 0.500 or the sells below 0.200. I personally just cover some of my information just because I have a bit of a social media following and influence, and you never know some creepy people out there that will try to hack your password, hack your information, you know what I mean? A lot of creeps out there in the modern age. All right, so everybody, through this webinar, we went through trading psychology, we went through historical analysis and higher time frame analysis. I gave intraday trade ideas and technical and fundamental analysis on gold, GJ, GU, Euro USD, and USD Cad, right? US 30, I'm still on a bearish bias down to 33,800. We went through the economic events and what we had on the docket today, as well as what we have coming up. We went through key fundamental points. And all those trade ideas I laid out to you guys are still potentially active and valid through the next period of the session. As well as the next couple of days. Okay? But so far through the 2 hours we've been watching the markets, we have not had any execution points for us to take advantage of, as it's the start of the new month and markets are primarily slower, as we're going to get a lot more volatility tomorrow with NFP. All right? If we can get 450 likes on this stream, or 400 likes, I'll do an NFP stream tomorrow because Raja asked me to. But right now, I have to go. I have an appointment to head to. So hopefully, if everybody enjoys this content, hopefully you guys like the content, you guys like the information, the fundamentals and technicals. We've been streaming here for about 2 hours now. Today was a no trade day, as markets are a lot slower with the volumes and volatility. Right? But all those trade ideas I gave out, all the information I gave out is still valid here. All right, everybody. Unless anybody has any questions or any issues, complaints, or comments, this will be saved and uploaded to rewatch on the YouTube page. And tomorrow I should be doing the NFP stream in the morning, but it's going to be a bit later, around 7:30, 7:45 a.m. Eastern. Make sure to check out all of your resources within the description. Go through this YouTube description here. And I will see all of you guys next time. Take care. Have a great day. Thank you for the support.